Welcome, everybody. I'd like to do a real quick sound check. If you can hear me, go ahead and type in the question box and tell me where you're located today. I am in Kansas City, Missouri area where it's a little cool. We got somebody from Florida and Dallas, Ohio, Arizona, Florida, Ohio again, California, Indiana. My goodness, you guys are typing so fast. All right. Well, thank you. Orlando. We're going to be in Orlando soon for Scaling New Heights. We got somebody from Alberta, Canada. Glad you're here. Somebody said the center of the universe. Well, cool. I hope it's nice weather there. All right. Thank you all for joining us. That's how you're going to be typing in your questions today. Yay, we got somebody else from Ottawa and Toronto as well. Love it when our Canadians join us for this. Okay, so that's how you're going to ask your questions today, is you're going to type it into that question box. So I'm going to be silent for a few seconds, and I'm going to start the recording, and we're going to get going. All right. Welcome, everybody, and thank you for joining me for another QB Power Hour. Today's topic is profitability, analyzing and advising clients. So a little bit about, this is the agenda. We're going to talk a little bit about QB Power Hour and the host. We'll go over the CPE process and ACE. And our learning objectives for today is we're going to help you learn how to analyze profitability with some key ratios and other methods like profitability by customer, product or service, class or location, how to discover how to find industry ratios that you can use as benchmark, and then also help you determine some recommendations for your client to help them improve their profitability. So a little bit about the QB Power Hour, because we always have some new people joining us. The QB Power Hour is normally every other Thursday. Occasionally we will skip a week, like right before tax season. It was supposed to be on the 13th, but we moved that to the 20th. And sometimes we will have special episodes. So as you can see from those upcoming webinars on May 11th, we're going to talk about practice management and Arrow workflow. Then we're going to have a special QB Power Hour. That means it's not one of the every other weeks, but on May 18th, I'm going to do part 2 where we're talking about advising our clients, and we're going to be talking about liquidity and cash flow. So today is profitability. Part 2 is liquidity and cash flow, and we'll be talking about that on May 18th, and that one is ACE approved as well. Then May 25th, we have T-Sheets joining us. So hopefully you can join us for these. Just put it on your calendar and set up a recurring event to happen every other week on Thursdays. And then when we have special ones like this, you can go and add that one in there too. All of them do start at noon Eastern. I know, I think with the time change that some of the updates or emails were a little bit off, but they all start at noon Eastern. And we usually cover tips, tricks, and advanced insights, either on desktop or online, or some of the webinars will do both of those. And sometimes we'll talk about other things like third-party apps or practice management, and that's kind of what we're doing today. We're talking about some practice management type of things or advisory services types of things with some QuickBooks in there as well. So we really want to thank also our platinum sponsors. We really appreciate these sponsors. They're the ones that make this free for you. So Hector and I can continue providing these webinars free and including the ACE credits free for you. So we really want to thank our platinum sponsor T-Sheets. They've got time tracking and scheduling. They work side by side with Pro Advisors to help us operate more efficiently. And if you want to learn more and sign up for a free Pro Advisor account, go to tsheets.com. Also, one of our new platinum sponsors is Arrow Workflow. Oh, and I forgot to mention T-Sheets. We're doing a webinar with them on May 25th. And then Arrow Workflow, that's dealing with workflow management for accounting professionals created by accountants. So they kind of looked at the pains that they were having managing their workflow, and they created Arrow Workflow. So you'll see that they really understand how your firm works. You can integrate detailed procedures into step-by-step checklists that helps you to have repeatability as well as scalability. And we're going to do an upcoming webinar with them on May 11th, so in about 2 weeks. Also check out their website at arrowworkflow.com. And then we also want to thank our silver sponsor, HubDoc. If you haven't checked out HubDoc, I encourage you to do that. Go to that URL there, hubdoc.com/QBPowerHour, to get your free HubDoc partner account for your practice, and you can test it out yourself and see how cool it is for fetching bank statements and other receipts or things like that, and how cool it is. So again, you can sign up for your partner account there at that URL. So again, thank you to all of our sponsors. We really appreciate them. Those of you that don't know me, my name is Michelle Long. I'm a CPA with my own practice, Long for Success, in the Kansas City, Missouri area. I'm thrilled to be an international trainer for Intuit. I love helping accountants and bookkeepers learn more about using QuickBooks. 5 books, you can check them out on Amazon, and that's enough about me. Hector, you want to introduce yourself?
Hi, Michelle. Can you hear me?
Yes, we can hear you. Great.
Oh, hi, everybody. My name is Hector Garcia. I'm a CPA and CITP, which is Certified Information Technology Professional. I am a member of the Intuit Trainer Writer Network, and I teach QuickBooks in here in my Miami training center. There's my email. There's my Twitter handle. If you want to communicate, send me questions. I'm available for that and glad to be here.
Great. Thank you, Hector. Hector, we're glad to have you back joining us. He first of all was busy with tax season, and now, can you believe, right after tax season, he's moved to a new house. So I'm surprised to see you joining us today, because I think he's got a lot of unpacking to do. But thank you, Hector, for joining us. Now, Heather, we've got Heather Satterley, who's going to be helping out with some questions today. Heather, you want to introduce yourself?
Yeah, hi, Michelle. Hi, Hector. Thanks for having me on today. Hi, everybody. I'm Heather Satterley. I'm also a trainer writer with the Intuit Trainer Writer Network, and I have a little firm here in Rhode Island. And my firm's all about helping bookkeepers and accountants improve their workflows using apps and using other cloud-based accounting applications like QuickBooks. So thanks for having me. Really happy to be here.
Thank you, Heather, for helping out with the questions. And I want you all to stay tuned, because in the near future, Heather and I are going to be announcing a new series of webinars that we're going to be having coming out, and I think you'll be interested in them. So stay tuned. That announcement will be coming soon. All right, so let's talk about the CPE process. I know I've seen a lot of you posting. The handouts say no CPE. You're right, or no ACE. You're right. I updated the slides after I created that PDF. This one is eligible for ACE, Advanced Certified Education Credits for Advanced Certified Pro Advisors. So just in general, if you do need CPE or ACE credits, you must be attending this webinar live, not watching it as a recording. You have to be logged in for at least 15 minutes, and you need to answer 3 out of the 4 polling questions that we're going to have throughout this webinar. Then CPE certificates will be emailed to you within about 3 weeks. Don't expect to get it, the next day or within a couple of days. Give us 3 weeks to do that process. Again, this one is eligible for ACE credits, and there's the link where you can report that. If that website hasn't been updated with this session yet, give them a little bit of time to get that updated. So if you don't see it immediately after this webinar, check back later today or check back tomorrow, and that will be updated out there. So that's a little bit about the CPE processes. Upcoming events is we've got QB training events. We are hitting the road. Myself, Heather, Hector, and a lot of other trainers are starting these live roadshow events, going to various cities starting in May. So May and June, we might be coming to a city near you. Go to qbtrainingevents.com to check and see if we're going to be in your city. I know I'm going to Dallas, Long Island, Seattle, a lot of other places, so I can't remember, but check that out and see if your city's out there. Hopefully you're planning to go to Scaling New Heights, and we're going to see you down there in Orlando in about a month, I guess. If you're wanting to go to that, it's great training on Intuit products and various QuickBooks topics and things. And then also QuickBooks Connect, the best conference of all. If you can attend that, that's in San Jose in November. We'd love to see you there. All right, let's get down into the details. All right, so this topic today, we're talking about profitability and analyzing profitability and advising our clients when it comes to profitability. Some of you, if you've had this in college, if If you have a 4-year degree, you may have taken a lot of classes talking about profitability ratios and things like that. So some of you, this might be review. Some of you, this might be new. So we're hoping that this is going to help you to provide value-added services for your clients. So today we're talking about profitability. Again, on May 18th, we're going to talk about liquidity and cash flow. So first of all, we're going to be talking about some of these key profitability margins: the gross profit margin, operating profit margin, and then the net profit margin. Those are all some key ratios that you want to be paying attention to for your clients. And the great thing is with QuickBooks, you don't have to know how to calculate these margins, although it's relatively easy, and here's the formula. But if we go into QuickBooks, let me get into QuickBooks here. Whoops, that's the wrong one. Let's get into this one. If I go out here and I'm in Craig's Design and Landscaping, the sample company, if I just go in and create a profit and loss, and then if I customize that, under rows and columns, if you scroll down, see where you can do percent of income. That will take each line divided by income or sales. So like the gross profit divided by sales will give you the gross profit margin. So you can add that column there, run that report, and now I can see at a glance. Let's minimize some of this income because there's a lot of it. Here's my income. Here's my gross profit margin. There wasn't any cost of goods sold on this one. This wasn't a good example, was it? There's no cost of goods sold on this one right here, so I apologize for that. But you can see over here this percentage. It would be calculating what your percentage is. So the gross profit margin on this one is 100%. Our operating net, our total operating income here, net operating income, so our operating margin would be 52.83%. And then your net profit margins down here with your net income, that's 16%. So it's automatically calculating this for you. And best of all, let's say you want to watch the trends. We're going to talk about that a little bit. If I change this to display my columns by month, run my report again, now, whoops, let's change it to this year to date so I actually have more information. This year to date, now you can see you will have those profit margins for each one. All right, and here's some cost of goods sold that are out there. Nope, all zeros. Here's a little bit out here. We got a little bit of cost of goods sold there. So under my gross profit margin, now it's like 96%. But you would see these for each month to be able to monitor trends and see how things are changing. So it's really easy to get these ratios on the reports from QuickBooks. You can do the same thing in QuickBooks Desktop that I just showed you in QuickBooks Online. You just customize or modify the report to include that percentage of income column. So you can do that in the desktop as well. So now what are we looking at when we're looking at this? How are things changing over time? So I showed you like that where I did it monthly, and I could do it monthly for 2 years. And what you may want to do is export the report into Excel, and then you can create charts and graphs that will show the trend over time so that you can see the trend line to see, are things improving or are they deteriorating? Is the gross profit margin getting better or is it getting worse? And then what is driving the changes? And this is where you have to think of what makes up that ratio. So let's say a good example here is I had a client, and this was several years ago. He had a sandwich shops. It's not like a Subway. It wasn't a Subway, but he had some sandwich shops, and their gross profit margin was declining. It kept going down every month. And so I'm trying to look to determine what is causing that gross profit margin to go down. Now, gross profit is made up of two numbers, sales and cost of goods sold. So what do you think might be causing a declining gross profit margin? Do you have any ideas what you think that might be? I'm going to ask you to type your ideas out there while I launch this poll question. So here's our first poll question. While you're answering that poll question, type in there what you think could be affecting their gross profit margin for a restaurant. This is a sandwich shop, so for a restaurant. So some of you just said cost of sales. Be a little more specific there. And that's where, yes, we have people, okay, you guys are typing so fast, I can't keep up with you. All right, so we have some people saying material costs went up, increased food prices, and items missed postage, to the cost of goods sold, higher cost of goods, expenses increasing, theft, pricing, purchases, employees putting too much on sandwiches, lower sales, and increased costs of ingredients. Okay, so this is very good. As I'm scrolling through all these things, and somebody else said sales are going down, increased cost of food, shrinkage, spoilage, higher cost of goods. You guys are great. Most of you are focusing on the cost. Only a few of you, and a lot of you have typed some things in here, only a few of you are mentioning the sales aspect. So we're going to look at some of this in just a second, but you guys have great. You're thinking very good. All right, so I'm going to give you about 5 more seconds to answer this poll question here. If you need CPE credit or the ACE credit or both, please answer this poll question. I'm going to give you 5, 4, 3, 2, last chance before I close it. Here we go. Closed. All right. And I'll just share that with you. 54% of you are a CPA or an accountant, 30% bookkeepers, 9% consultants. We have 5% tax professionals and 1% other. All right. Very good. Thank you for answering that. Okay. So back where we're talking about what might be changing. So this client with the sandwich shop and had the declining gross margin. Well, when we're looking at the gross profit margin, as I mentioned, that's made of 2 components here, gross profit and sales. So a lot of you focused on the cost being too high, but what about the sales? Are the sales too low? You know, if the gross profit margin is declining, let's say our cost is staying the same, that would mean our sales are declining. Maybe all the sales aren't being recorded. Maybe they're recording at a lower price that it should be, or are the prices too low? So for example, in a restaurant like the sandwich shop, not all sales are recorded. You could have some employees, their friends are coming through and they're not ringing it up, or recording a lower price item. Maybe they record a kid's meal when they got, you know, the deluxe sandwich or the extra large or whatever. So they might be recording at a lower price item, or maybe they're just ringing up the soda and they're not ringing up the whole meal. So it could be that the sales are not all getting recorded. There could be the prices are too low. Maybe they haven't priced things adequately. They don't have enough margin to be covering these costs. So it could be some things with sales. And if you've got problems with employees and maybe not ringing up everything or ringing it up accurately, that's why I don't know. Have you ever gone into a restaurant and you see a sign where it says free lunch or $5 cash if we don't give you your receipt? One of those is to, you know, make sure that these employees are ringing up the sales, putting the customers saying, hey, you know, I want my $5, you didn't ring it up. So that's kind of a little security measure that's easy to implement. The other thing some companies will do is install the cameras to monitor. Sometimes I've even heard of a company putting fake cameras up there. It's not really a camera. It's just a little thing that looks like a camera with the red light, and that's enough of a deterrent where they think they're being recorded and that people are watching them. So you know, you got to make sure that that's taken care of on the sales side. And yes, they may need to do more marketing or promotions, things like that, if sales are too low. The other aspect that many of you mentioned was that the costs were too high. Did the supplier increase their costs? Maybe the cost of the food went up. In that situation, then maybe the store needs to increase the prices of their sandwiches in this example. Or waste, and that's where some of you said spoiled food and they're not doing it correctly. And that's what it could be. Maybe they're not making it correctly. Maybe they're putting way too much meat on the sandwiches. Maybe they're not putting it up like you said and there's waste. So you could have some situations there where you've got either, you know, over putting on too much, putting on too many ingredients and using too much of it, or not properly taking care of it, so they have spoilage or waste, or making the sandwich improperly. In all those situations, that would require more employee training. You know, so if the supplier did not raise their prices, you have to look for other reasons for why the cost is going up and increasing. The other thing is there could be theft. And in the situation with my client that had the sandwich shop, you know, we looked at sales. Sales looked pretty steady. You know, it didn't look like sales were declining, so they were pretty steady. The cost, you know, the supplier hadn't really increased our prices, but our cost was going up. Our food cost was going up. And this is where it was frustrating for me, because I kept telling the owner, I said, your gross profit margin's going on, it's either, employee waste or spoilage or theft. There's something going on, and it took months before he would actually sit down and start investigating, because we're so busy. Once he started investigating, there were some of the teenage boys taking cases of meat out the back door. So there was theft going on, and it went on for several months before it was detected because the owner was too busy. So some of these ratios can really help identify some of those problems. The other thing is then under the operating profit margin, this is where you're looking below cost of goods sold, your operating expenses. So your sales is still your income number, and then your operating expenses. And this is where you'd have to investigate, again, making sure all the sales are recorded properly, but then investigating expenses. Which ones are higher compared to prior trends? For example, let's say you've got someone who's a construction client, or maybe it's HVAC or plumbers or things like that, where they have a lot of small tools. Maybe small tools expense is going up. Maybe people are taking those tools home with them and building up their own toolbox and, taking some of the tools home and stealing them. So you've got to look at some of the trends on those expense accounts to see what's changing, what's increasing, and look for an answer. I had another client one time where the water expense was going up, and it was higher than usual, and nobody could figure out why. And they started walking all around the office and walking, everywhere. When they walked in this one location, they heard the carpet squishing, like squishy, squishy. And they come to find out there was a water leak behind the wall that had been going on, and they didn't know about it until we saw the water expense was going up more than it should be. So again, monitoring these things for your clients can help alert them to problems that might come up. Then also your net profit margin, that's where you're looking at any other income or expenses that could be affecting it. So these are some things where you have to be monitoring and looking for some changes and trends and things that might be wrong.
Hi, Michelle.
So how do we, yeah, Hector, go ahead.
Yeah, I do have some observations on that as well. And before you get into the next slides that are important, a lot of times I just want to tell you some of the lessons I've learned as a consultant. A lot of times we, as accountants and finance people, we think that the problem and the solution, it's in the numbers. And the numbers are the ones that they give us guidance in terms of what we need to look at. But most of the solutions are actually not financial. They will be behavioral. I'll give you a quick example. McDonald's, about 25 years ago, they discovered that when they increased the attachment of French fries to hamburgers by 8%, it translates to millions of dollars of profitability. So all they did is simplify, and they added, do you want fries with that? And that's become part of the language of every single McDonald's employee. Will always say, do you want fries with that? And that's part of the strategic element of increasing the profitability by adding to the product mix. Then later on, a couple of years later, when they were looking even for more profitability, they changed it to, would you like fries with that? Would you like to supersize for only 49 cents or only 29 cents? So something as small as changing the behavior of one particular employee can have a huge repercussion to the numbers at the year end. And within the same element, because I studied McDonald's very deeply in college for a project, on Wednesdays, they used to have a promotion, I don't know if they still do, where they sold the hamburgers for 29 cents or 49 cents without cheese, by the way. So 49 cents or 29 cents, I forget. And this was a huge problem in terms of profits. The burger itself didn't make any money. However, adding cheese to a cheeseburger was another 29 cents. And the entire profitability was in adding that cheese to that 29-cent hamburger. So as simple as offering cheese to the 29-cent hamburgers, McDonald's was able to find additional profit. So I just wanted to add that because you were talking about restaurants, and I had some experience with McDonald's in particular.
Yeah, and Hector, those are great stories, and I have some of that on the next slide. But that's a good point too. Learn from what some of the big companies do. When you see big companies doing things, that's where these smaller businesses can implement the same strategies and the same tactics to improve their profitability. So those are all good examples, Hector. And I've got a slide talking about that and some other things on areas to improve profitability. I went ahead and launched the next poll question. So I went ahead and launched this poll question here for the second one. So go ahead and answer that poll question. Oh my goodness, I want to congratulate Christina says, sorry I'm late. I just passed the QBO advanced exam. Woohoo! Congratulations. That's awesome. And then somebody else said, good point, Hector. The fix is usually behavioral. Love this. Yes, it is. A lot of times there's behavioral issues there. All right, go ahead and answer this poll question. The faster you answer this, the faster we can move along and get into more of this content. So I'm going to give you about 10 more seconds. There's some of you that have not answered yet, so I'm going to give you 10 more seconds. Okay, you got a few seconds left. Last call on this. So 5, 4, 3, 2. You better answer quick. It's gone. Okay, let me go ahead and share those results for you. Do you currently provide advisory services to your clients? Yes, I have been for a while. It's 48%. 25% yes, just getting started. 19% of you no, just doing the bookkeeping. And then 4% are no or NA. All right, well, so for those of you just getting started or just doing the bookkeeping, this is a great opportunity for you to increase your sales and grow your business and your practice. So talking about increasing sales, they may need to do increased targeted marketing and promotion. And one of the mistakes I'll see a lot of small businesses do is they will have all these people ask them, do you want to put your ad in this thing? Do you want to put your coupon in this, mailer that goes out every month or week or whatever? And they'll just do everything that comes along. And they don't really have a marketing plan. And they're not really targeting their marketing necessarily to their target market. So increasing that in the promotions, like Hector said, having a special certain days of the weeks. And I will admit I'm on Papa Murphy's text thing, and they'll text me. And even just yesterday, they said, large cowboy pizza for only $9. I was like, oh, that sounds so good. So what did we have for dinner last night? We had pizza. So those promotions and marketing can help a lot as well. But we also need to help our clients ensure their prices are set with adequate markup. Sometimes our clients don't realize all of the expenses and the overhead and income taxes and sales, well, not sales taxes, but other taxes like property taxes, whatever. They don't realize all the costs and expenses that they need to cover, so their prices may not be adequate to provide an adequate profit margin. Then also help them upsell, like Hector was mentioning, upselling to higher priced items. Would you like the super size, like he was saying? Would you like, instead of this, would you like that? So upselling to higher priced items or larger sizes. And then also bundling and packaging things together. Hector was talking about McDonald's. They are the first ones to come out with a Happy Meal. And actually, it was a marketing firm in the Kansas City area that came out with the idea of a Happy Meal. They bundled their hamburger, their fries, and the drink together in one value price, if you will. And now everybody does that. You have meals everywhere. But McDonald's was the first to actually do that. We can even do bundling. We can be bundling our services with other things like the basic monthly bookkeeping and payroll, along with profitability analysis and advising, or some of the other liquidity and cash flow. You can bundle that in with your services. Then also we want to ensure that all sales are being recorded and they're accurate. And I already mentioned some of those things to help with that, like that one restaurant that says, if you don't get a receipt, you get $5. So those are some things on the increasing of sales, and I'm sure there's other ideas. These are just a few to get you thinking, to help you talk with your client about some of these things. Then also when it comes to reducing our costs of goods sold and or our operating expenses, they may need to search for lower cost suppliers. They may have got one supplier right off the bat. They may need to now search for other suppliers that can provide the same quality, but perhaps at a lower cost. Also, the ability to renegotiate the terms with the suppliers and vendors. If they just are starting out, they're not going to get very good terms from the suppliers and vendors. once they've developed a relationship and they've been working and they've been in business for 6 months, a year, 2 years, go back and try to renegotiate those terms with the suppliers and vendors to get longer time to pay, to get lower prices and discounts, things like that. Also, then consider, now I'm not saying this is a definite, but consider purchasing larger quantities for better prices or discounts. Now, this is if the cash flows allows it and within reasonable quantities. Like with perishable items, obviously you can't purchase too much. But I also saw this one restaurant, he was constantly running out of some things and having somebody run to the store and buy it at the grocery store, whereas he can get it cheaper. So, maybe he's not doing an adequate job of monitoring the supplies that are on hand or the food that's on hand and what he needs, so he might need to be purchasing larger quantities. And then also larger quantities, a lot of times you may be able to get better prices or discounts. Streamlining the workflow to improve efficiency. Even in the restaurant, streamlining the workflow to make sure they're doing things properly, they're not putting too much ingredients on there, that they're not wasting or spoiling food, things like that, as well as in retail stores or any other stores where you can streamline that workflow to help improve efficiency and bring the cost down. Training those employees to minimize waste or loss, that's always very important. And then watching for employee theft. This is unfortunate, but this is the biggest loss to a lot of small businesses is actually from employee theft. So that's something you got to be careful of. And employee theft is not just taking meat out the back door like we mentioned, but not ringing up properly and giving your friends when they come in a good deal or a free meal or whatever. So employee theft can take many forms. So you have to watch for that. And then the other thing too is I've seen owners who might take some of the food home or some of the supplies or some of the inventory or whatever. The owner needs to set a good example. And if the employees see the owner doing it, then they may think it's okay to do it. So you got to talk to these owners about, you can't be doing that, because then the employees might think it's okay and they might be doing that. Then also reducing or eliminating any expenses that are unnecessary. And I mentioned that because like some of the marketing or advertising expenses, small businesses may not have a targeted marketing plan and they just start spending money here and there and everywhere. Or maybe they're joining every single chamber in the metro area instead of targeting it to certain chambers that are more targeted to their target audience and stuff. So those are some things to be looking at as well.
Michelle.
And then also, yeah, Heather, go ahead.
Hi, I just wanted to share something. I was reading some of these comments from some of the attendees about how they've had experiences where things that were going on in the business, like somebody said that a chef started ordering more expensive materials for the restaurant, so that drove the gross profit down. And I'm also seeing comments about people saying, some of my clients don't want to pay for these advisory services. And one of the things that you could consider saying is using these examples when you talk to your client. So if you have a client and you see a big change in that gross profit and the cost going up, and you're only looking at their books once a year when you meet with them to do the tax return, the variance is going to be a lot bigger than if you're advising that clients throughout the year. And you can use examples like that with your clients when you're talking about that relationship that you're going to have with them. And tell them, if we're looking at your gross profit, monthly, we're going to catch things like this a lot faster and save you money than if we wait until the end of the year when we meet and we're looking at, 12 months of activity. Maybe the problem, happened over 7 months and that expense is going to be a lot larger. Just wanted to interject.
Absolutely.
Heather,
yeah, that's
to
a
piggyback
really good point.
Yeah, piggyback on what Heather said. For people that are afraid or don't know how to quote unquote get started, you can take these slides, okay? The slides that Michelle put together, the one on tips on how to increase sales and how to reduce costs. Copy and paste them on an email and ask your clients, hey, if at any time during the year you would like to sit down and talk about potential ways that you and I could look into every aspect of your business with a magnifying glass. These are some of the bullet points of things that I've helped my clients do before, and just literally copy and paste what's on these slides on that email. And trust me when I tell you, I'll swear it on anything that's valuable to me. You will out of 10 emails you send, 2 people will have at least two or three of those things that are a big concern to them and call you and say, well, tell me about negotiating terms with suppliers and vendors. What would you do? And then you can say, well, let's set up, a couple hours, whatever, and let's go contract by contract. Let's do some research. A lot of these things, as I mentioned before, they don't take rocket science. It's just that business owners are so busy that they don't have time to look at these things. But all of these things are real pain points for almost every business owner out there. Even myself, I'm looking at these things, at these bullet points, and there are things in here that I know that I should be looking at, but I just don't have time. And if there was a third party person that would help me with that, that would be valuable. It doesn't take a genius. It just takes somebody that has the time to pay attention to it, and it's a third party in the whole process, not somebody with predetermined thoughts and opinions about any of these things. So there's a lot of value on somebody like yourself, like an accountant, like a consultant, just asking questions and looking at the documents and suggesting things. There's a lot of value there. Just wanted to add that to piggyback on Heather's comment.
Yes, and you both had really great comments there, and I do have a slide towards the end where we're going to talk about adding these services to your clients and things like that, but both of those were really great comments, and that's why I wanted to do a webinar like this, because I think this is an area where all of us can help our clients and add additional value to our services and help them, because like Hector just said, they may know they need to work on some of this or they need to do it, but they just don't have the time to do it. So this is where we can provide a lot of value above and beyond just the bookkeeping or payroll or whatever. This is very valuable stuff for our clients. So great comments. Okay, so now let's go ahead and talk about, what is a good profit margin? What is a good operating margin? Or what about net profit margin? What is a good number? How do we know if that client is doing good or poorly? What industries might have a high margin? What industry do you guys think would have high profit margins? Okay, what industries do you think would have a high profit margin? Type that in there. What industries do you think would have a high profit margin? Service-based, attorneys, consulting. Can we access benchmarks? Hang on, I'm going to show you in just a minute. CPA firms, consulting, tech, jewelry. Yeah, jewelries do. Somebody said grocery stores. Well, I don't think so. All right, so you guys got lots of ideas out there. I see lots of services.
Maybe Whole Foods. Maybe maybe Whole Foods.
Yeah, there you go. Okay, now on the flip side, what industries, and we're going to look at industry averages in just a minute, what industries do you think would have a low profit margin, or what business, like a specific company name? Restaurants, grocery stores, food, yep, restaurants, discount retail, Costco, yeah. So, and that's where, okay, so this is where I really want you to think about it. A store like Walmart, their whole thing is low prices, low prices. They have very thin, low profit margins, but they get it on volume because they sell billions and billions of dollars, so it adds up to a lot of profit. But then you have some other ones like jewelry stores that have a very high markup and a high profit margin, but lower sales and stuff. So we do want to know kind of what should that profit margin be? What is a good average for them? So there's places where you can find this information. If you go to your library in the resource section, there's RMA, and it used to be Robert Morris Associate, but now it's Risk Management Association or something. RMA statements. There's these books where you can look up by industry or by NAICS code and get all of these detailed industry averages. And that's actually the best resource. And what I used to do is I would go to the library, take my 10 cents per copy, and I'd have a list of, like 10, 20 industries that I wanted to look up, and I'd copy it, bring it home. I still have not found it online unless you want to pay lots of money for it. And by lots of money, I mean like 500 and up. It's very expensive for RMA stuff. But there is something, it's not as good and not as extensive, but it's a good guideline if you're just getting started. And that's called BizStats. And they have a free ability to get some free averages, or you can get better numbers if you pay for it and do the paid version. And this is online. So let's go into BizStats. So it's bizstats.com. This is a free website for you to come up with some of these benchmarks so you can tell the client your gross profit margin's well below industry average, or you're above average, that's great, or your operating margin. So here where it says to search for industry financial book benchmark. So you're going to click right here, and then you choose, is it a corporation? You can see there's 251 of those, or a sole proprietor. I'm going to choose corporation. And now let's go in and let's look at retail trade, because we were talking about restaurants. Let's do retail trade. And out here, let's see, there's food. There it is, food, beverage, and liquor stores. Let's do food and beverage stores. It's not exactly a restaurant, but this will get me out there to show you some of this. So here we have your sales is always 100%, cost of sales, and then your gross profit margin is 23%. In this example, you can also see what the percentage is for salaries or wages to see if they're paying too much, what's their average rent, advertising, how much they're spending on advertising, and some of these other things. Then down here you can see the net profit margin as well. So this can give you some ratios to use kind of as benchmarks. And then also, let's go back and look. Several of you said that it was very high margins for people like us that provide services. So let's go into professional services, and let's look accounting and tax services here, and let's see what our gross profit margin is. So the other one, what was it, like 23% for a food and beverage store? Here it's 91% almost for us who are providing accounting services. So our margin is much, much higher than a food and beverage location. So this is where this can help you to see. Also, then you see under our salaries and wages, we have a much higher percentage on that than that restaurant did, or the food and beverage store. So this is really great that you can get. Somebody says, can't really compare to 2013 rates. Carol, that's a good point. If you want current rates, that's where you can go to Biz Minor, and you can get 2015 rates. But prices haven't changed a whole lot. Things haven't changed a whole lot in the last couple of years. So I think this is a good guide just to get you started if you're wanting to do something free. If you want to pay, in the upper corner, then you can see the Biz Minor up here. It allows you to get more detailed information and more industry choices and more recent information. So I'm showing you the free version. There is a paid version with more up-to-date things like that. The other thing to consider, and I've got a slide on this, there are third-party apps that will help you to monitor some of these ratios and these trends and things like that. I've got a slide coming up on that. But let me go ahead and launch another poll question here. We go ahead and launch that. Somebody says, I get gross profit margin and net profit margin, but what is operational margin? So Shireen, when you look at your profit and loss, you'll see gross profit margin. Then you'll see all of the operating expenses. Then you'll see operating income, and that's where you can see your operating margin. Then other income or other expenses, that would, sometimes companies don't even have that. So in some situations, the operating margin and the net profit margin will be the same. If they had, a loss from, theft or some kind of loss from, something got destroyed or whatever, they may have some unusual expenses or income and other income and expenses. That would make the operating profit margin different than the net profit margin. So you got to look at the P&L to see what's in there. All right, so somebody says QBO does not show comparative statistics. No, this is where you can export that P&L to Excel, and you could drop in your own percentages here from these business statistics from the industry averages that I'm showing you here. All right, let's close this poll question. Last call on the poll question. I'll give you about 10 more seconds. If you need the CPE or the ACE credits, please answer that. Okay, go ahead. And somebody says, do we stay on this call for ACE? Yes, you need to be on this for at least 50 minutes to get that. Somebody says, where are the questions? I can't view them. You won't see the questions unless Heather or Hector answer them and click reply all. That's why I'm reading some of these questions verbally to you. We literally have hundreds and hundreds and hundreds of you on here, so I don't think Heather and Hector can type that quickly. All right, I'm going to go ahead and close the poll. And I'm going to share this with you. How many of you plan to attend part 2, which is on liquidity and cash flow? Almost 50% of you, so 49 said yes, 37% said yes, they'll try. Very good. And then a few of you cannot attend it. So if you can't attend it, that's okay. We will record it, but it is another ACE one Remember, Hector and I are trying to do one ACE webinar per month. And so May 18th, we've got the special date there. That's part 2 of this analyzing the numbers and advising our clients thing. So hopefully you can be there. Okay, let's go back into some of our slides here because we got some more stuff to get through. Now, we talked about some of the main profitability measures, but there's other profitability that we can help track for our clients. Profitability by customer, you can assign those costs to your customers or a quote sub-customer or AKA job. So in QuickBooks Online, you need to have QBO Plus, and you can do basic job costing. You can do this in QuickBooks Desktop as well. You do need to enable that to track the cost by customer in the settings, under accountant settings and expenses. Then also, so I'll show you this in just a minute, we can track profitability by customer, also our profitability by product or service items. A lot of times our clients might want to see which items or which services are the most profitable. In order to do this, we want to set up two-sided or double-sided items. And again, that requires QBO Plus. So let me get into QuickBooks and let me show you this. So I am in QuickBooks here. When we were talking about tracking things by customer, I entered a check here recently. Here's a check. And when you're entering a check, an expense, or a bill, this is where under the account or under the items, let me go ahead and scroll down, you can assign it to a particular customer. You can make it billable or you can make it not billable. So this allows you to track those costs by customer. Also, in a minute, we're going to talk about class and location tracking. You can assign a class or a location to transactions as well. Now, I changed my location to say store. Instead of location, I have it saying store. So let's say this is going to be First Street here. So this is where we're saving that information. Then when we go create our profit and loss, let me just create a normal P&L here instead of showing the percentages there. P&L. This is where under display your columns by, I could change this to by customer. So in QuickBooks Desktop, you will find a profit and loss by job. There's a report that's called that, and it's just right there. In QuickBooks Online, we need to customize a P&L and tell it columns by customers. Here you can see I've got a list of my customers. Here's Amy, here's her income, and then here's, we've got a little bit of cost of goods sold, and then here's the expenses, so we can see the profitability of that job. All right, if you wanted to filter and just do it for Amy, I could come out here and filter by customer, and I could just pick Amy if that's the one I wanted to see. So you can filter it for just certain ones as well. This is how you can get your P&L by customer. We also can get a P&L by product or service item if we're setting them up as two-sided items. So under display the columns by, if you scroll down to the very bottom, see where it says by product or service? So a P&L by product or service. Now, so here's my design income. In order to see the expenses and the cost associated with those items, I need to set those up as a two-sided or a double-sided item. What does that mean? Under here, under products and services, so let's go in and design is already set up as a two-sided item. So let's go in and review that one. So here under my service item of design, if I click on edit, scroll down, you'll see here's the sales information. When I put it on an invoice or a sales receipt, where do I want the income to go to? Also, when I purchase it. So in this example, we're talking about design. Maybe I pay, maybe Hector's my subcontractor, and I pay Hector $50 for the design work, and then when I invoice it at $75 an hour. So this is where I might want to track my profitability by these items. So it could be a service item. It could be with Craig's Design and Landscaping, like a rock fountain. Maybe I don't carry the rock fountain in inventory, but I go buy it at the gardening store, and then I sell it to my client. So you can track the profitability by item when you're setting these things up as two-sided or double-sided items. So the two sides are the income and the expense. Then when you run that profit and loss, you can see out here, here's design, here's fountains, here's concrete. So I pay somebody for the concrete work, and then I mark it up and I sell it. Or I pay when I buy the concrete, and then I mark it up. So you can see down here the net income by product or service item. So that's another way you might want to track profitability for some of your clients. Okay, somebody says, what if the cost changes on the two-sided item? The cost comes when you pay for it. So you can put that cost in there, but the actual cost is going to come from when you're paying for it with a check, an expense, or a bill. So the actual cost comes from what you're doing that when you're paying for that. So that's something else that you might want to help your clients track profitability by some of those things. Then also with QuickBooks Desktop and online, you can track profitability by class. You do need QBO Plus. Then also with QuickBooks Online only, you can track profitability by location. And this is a good example of where, I mentioned the sandwich shop. Let's say that sandwich shop, they have 2 different stores. I could track it, the profit and loss for each location, because each location has its own income and its own expenses. For classes, that's the same type of thing. Sometimes you'll have like nonprofit organizations sets up a class for like each project or each grant that they might get. So there's different ways that you can use these things. I'm going to direct you to the advanced training materials, module 2. It goes over the details about the differences between the profitability by class and the profitability by location. But let's just go ahead and look at those reports. In your report list, once you've turned those on, you will be able to see, here's profit and loss by store, because instead of location, I changed the label for that. And let me show you real quickly under account and settings. Under your advanced settings, again, you need QBO Plus for this. See where it says you can track classes and you can track locations. On the locations, you can change it to be a department, a division, a location, a property, a store, or a territory. So in this example, I changed it to be stores. Maybe they have 2 stores and they want to track that. Also, one of the things that I do recommend is that you always have it warn you. If you're using classes, you can do this. You can't have it warn you on the locations, but warn you that you didn't assign a class. So if you're doing class and location tracking, make sure you create a class or a location for overhead or admin, things that don't necessarily apply to one particular class. Then you will be able to get those P&L by class or P&L by location. So, and here you can see P&L by store or location, and this is where I've got First Street, Main Street, and then here's not specified. We don't want that normally. We want everything to be assigned to a class or a location. I also then will see P&L by class down here under my business overview reports, P&L by class. Here I've got like north and south. I just made something up. But this is where you need to make sure that if you're using classes and location, that you're assigning everything to a class and location. And again, check out Module 2 of the Advanced Certification Training Materials for additional details on those class and location. One more comment, you won't see those reports down here unless you've set up or unless you've turned on and set up a class or a location. You won't even see the reports unless you've done that, okay? So keep that in mind. That's another way you can help your clients track some of that profitability. Okay, somebody says, do you advise using items for expenses? If you want to be tracking some of that profitability, yes, it is a good idea to do some of that. Tracking the items as an expense, that is good when you can do that, especially for construction or clients that want to track some of their job profitability. I do recommend using items. Okay, now we talked earlier, and Heather or Hector, I can't remember, one of them mentioned this. So how do we start providing these advisory services to our client and billing them for it? Somebody mentioned, my clients aren't going to pay for this. They don't want to pay for the additional. Well, one of the great things, once you start using QuickBooks Online in particular, and you start downloading those transactions from the bank, and you set up rules to auto add things that are recurring every month, like the electric bill, the water bill, the rent, all these things that are recurring, you can set up rules for them and have them auto add. You're going to save hours and hours of time when you're using QuickBooks Online. You can also automate other things like recurring invoices and have them automatically emailed. Customers can pay online, and then the payment and the fees are recorded automatically. So you can automate a lot of processes when you're working with QuickBooks Online, so it's way more efficient. So something that might have been taking you 20 hours a month to do in the past, now that you're using QuickBooks Online, it may take you only 4 hours a month to do it. So what I recommend is that you start switching to value pricing, and this is going to be one of the additional values that you can put in there for your client. So if you go to my YouTube channel, Michelle Long CPA, on my YouTube channel within the last week or so, I published a recording of value pricing with QuickBooks Online and wholesale discount, and we talked about how you can start doing some of that. We talked about having 3 different levels of services that you're providing. So look at McDonald's, small, medium, large. Look at anybody out there. You know, when you go buy an iPhone, do you want the base level, the medium level, or the premium level? They have different levels of storage on them. 3 is the magic number, so have 3 prices, and the basic level doesn't have any advisory services at all. Maybe the middle level has some of these advisory services where we're going to monitor these key ratios and monitor the trends for you. And then on the premium level, maybe we're going to meet with you every month to talk about things that you can do to improve your profitability or liquidity and cash flow that we're going to talk about next time. So consider bundling this in with your services instead of trying to bill your clients for it separately. Now, I've showed you how to do things kind of manually. You know, I said you can run these reports, you can do it for the whole year, export it to Excel, create your own charts and graphs. That's a little more time consuming. You might consider using a third-party app to help you to monitor some key ratios and key performance indicators. Additional factors that you might want to do, like profitability by square foot, profitability per ticket item, or you know, per sale. So there's different things that you might want to do depending on the client and the type of industry. So you might consider a third-party app. Finagraph, Fathom, and there's others out there. Go to apps.com and you can look for those. And here's a link to that pricing webinar that I mentioned, that recording that you might want to go watch, that talks more about pricing your services and bundling them and creating packages and things like that. So you might want to check some of those out there. Okay, and somebody says, love Fathom. Great tool, great support, great webinars. Where do we find Michelle's previous webinars? Rhonda, here's the link to that one on value pricing. But my YouTube channel is Michelle Long CPA. Okay, very good. Okay, we are almost at the very end here, so I want to remind you real quickly, and I'll do the poll question in a minute. Webinars that are upcoming, May 11th is Practice Management with Arrow Workflow. We also have that special one on May 18th. That's not a normal scheduled one, so put that on your calendar. May 18th, I'm going to do part 2. And instead of talking about profitability, we're going to talk about liquidity and cash flow. So I hope you'll join me for that. Put that on your calendar. And then T-Sheets is coming on May 25th. We do want to thank those platinum sponsors of ours, T-Sheets and Arrow. Both of them have webinars coming up in May. And then also HubDoc, we appreciate them being one of our sponsors as well. Make sure you thank them whenever you talk to them or if you contact them for supporting QB Power Hour, because that's how Hector and I are able to do this for free for you, because it's a lot of time and energy required to do these things, and especially giving you the free CPE and the free ACE credits. So make sure you thank our sponsors. April says, I like Finagraph. So got a lot of these here.
Hey, Michelle.
All right,
something on the
go ahead, Hector.
On the 3 options. Definitely watch that video that Michelle's talking about on value pricing. 3 options are the single most impactful thing that I have implemented and many folks have implemented as well. Let me tell you a quick story. Wendy's was having issues with sales. Back to the fast food restaurant thing.
That's my story. You're stealing my story, but go ahead.
Well, I started. So they started adding double cheeseburgers to the menu, but they didn't get a whole lot of traction selling double cheeseburgers. So they had all these consultants trying to figure out how to get more profit. Until one person said, what if you offer triple cheeseburgers? And the management was like, well, that doesn't make any sense. If we're not having any success selling double, how the heck are we going to be selling triple? Well, lo and behold, they added the triple cheeseburger, and people were starting to look at the menu and they said, well, I'm not going to eat triple, that's too much, but I'll eat double. So just the psychology of having three options shifts people towards one notch up, or towards the middle. So adding that third option there could just be a decoy to getting people to pay a little bit more for a secondary option.
And Hector, that is a very good point. And if you research it, there's lots of studies out there that prove having three options will increase your profitability. It's proven. There's a lot of research on that. So great story there. Even if you did get it from me, I won't hold you back for that. Just giving you a hard time, Hector. Okay, Heather or Hector, you guys want to add anything else? People that need CPE credit, please answer this last poll question. If you need your CPE credit, go ahead and do that. Anything else that you all want to add? I've seen there's lots of great questions. Somebody says there's the three options in this YouTube. Yes, I did discuss that in that YouTube video on value pricing, so you might want to check that one out there. Lots of you said this was helpful, so that's good. I hope this was helpful. All right, last call on that CPE poll.
So Michelle, the other thing that I wanted to mention, you already mentioned that there's great resources in those QuickBooks Online Advanced certification materials, and there's a lot of questions that people were posting about filtering reports and working with QuickBooks Online reports, and there's a whole section on reporting in the advanced certification that will help you get information about doing that.
Yes, that's a very good point, Heather. Those advanced training materials are a wealth of information. Even if you're not ready to take that advanced exam, access those training materials, because it's going to help you learn a lot more. Like Heather just said, on the reporting aspect, I mentioned earlier the differences on class and location tracking and tracking things by customer. It's going to help you learn a lot more about special transactions, setting up beginning and opening balances, working with those downloaded transactions and the rules and everything. So a lot of good information out there. So access those training materials to help you, even if you're not ready to start working on the test. That's a great resource. And anything else?
Yeah, the other thing I wanted to say is a lot of people are saying, hey, we heard that the advanced certification exam is changing on May 22nd. So yeah, I mean, that's really important too. So as Michelle said, you can access the materials that are there now up until May 20, until the end of May 21st, and then there'll be new content. But if you're taking the advanced certification exam now, you're going to need to finish it up by May 21st, because once the new exam's released, anything that if you finish 3 modules, you're going to lose those 3 modules and have to start over. So it's just something to keep in mind. People are asking, so I figured I'd throw that out there.
Yeah, very good. And some people are asking, how do they access it? Let me just show you that quickly, because somebody says the material's not there, just the exam. So when you're logged into QBOA, and if mine would refresh here and go back to my dashboard, it's all of a sudden decided it's going to be very slow.
And Michelle, one thing, we still got 740 people connected, and you mentioned you were gonna talk about a new webinar series you're doing with Heather. You haven't talked about that yet, so mention that as well, and how to get connected to it and all that stuff.
Well, I don't know. We were going to announce all the details yet. We're not quite ready. Unless, Heather, are we ready?
Probably not.
Yeah. Just stay tuned. Heather and I got to work out all the details on the exact date that we're going to start doing it and things like that. So give us a little bit more time. But here's where you can access those advanced training materials. Under QBOA, you click on the Pro Advisor on the left navigation bar. Under the certification tab here, when you click on the name QuickBooks Online Advanced, that opens it up to show you, here's those training materials. Download these supplemental PDF guides, keep those as a resource. If you want to, go through and listen to the recordings that goes over it. And so as Heather said, these are all going to be updated and changed towards the end of May. We're doing the final testing and everything now, so it'll be launched in about a month. But you can go ahead and download these, keep these as a reference, so that you've got that available. If anybody's joining us at Scaling New Heights, Heather and I will be presenting the advanced certification, the new materials at Scaling New Heights in June. So we'd love to have you attend our sessions there as well. But download these supplemental guides and use those to help you when you're working with QuickBooks and your clients. All right, good question. Okay, anything else that we need to add? Heather or Hector, anything you two want to add?
Just thank you. Thanks for having me. I really enjoyed it.
Well, Heather, thank you for taking your time out to answer questions. And Hector, thank you for joining in the midst of your unpacking and finishing up your move. We really appreciate that. And again, join on May 18th, that special webinar. Don't forget to put that on there. And stay tuned. Heather and I will be announcing some upcoming webinar series that I think many of you will like. So stay tuned. We'll be announcing those soon. And just want to thank everybody for joining me today. I hope you guys all have a great day. And see you on May 11th for the next QB Power Hour. Thanks, everybody.
Bye-bye.
Have a great day.